The U.S. Central Bank's decision to raise the federal interest rate by a 1/4 percentage point was the result of being stuck between conflicting forces. Don't raise the rate enough, and consumer prices may continue to soar. Raise it too high, and more banks may fail.
History has shown that isolated banking problems, if left unaddressed, can undermine confidence in healthy banks and threaten the ability of the banking system as a whole.
The banking turmoil hit suddenly 2 weeks ago when 2 mid-sized banks failed. People lined up to demand their money that was no longer there after Silicon Valley Bank sold its government bonds at a loss due to high interest rates. SVB's practices had caught the attention of banking regulators in 2022, but the Fed failed to prevent the crisis. Chairman Jerome Powell said the blame lies with the bank, now under investigation.
At a basic level, Silicon Valley Bank management failed badly. They grew the bank very quickly. They exposed the bank to significant liquidity risk and interest rate risk.
An emergency intervention by regulators and the U.S. Treasury Department has stabilized the banking sector for now. Treasury Secretary Janet Yellen told a Senate committee on Wednesday that regulatory reforms may be required.
This was a very unusual set of circumstances that Silicon Valley Bank faced. It appears that they had significant interest rate risk that they were subject to, and an exceptionally high, over 90% of their deposits were uninsured.
The big day of financial news made for volatile trading on Wall Street, with the Dow and S&P closing down more than 1.5%. Investors fear even the modest interest rate hike will increase pressure on banks.
I think this is going to only add fuel to the fires.
Just how much higher will the federal interest rate go? Well, the Federal Reserve is signaling that it's approaching the end of its aggressive campaign to raise interest rates in order to lower inflation. Perhaps one more interest rate hike is expected before the end of this year, and then if inflation indeed continues to descend downward as expected, then come 2024, interest rate cuts could be expected. Heidi, Zhou-Castro, Al Jazeera, Washington.